The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. We're going to have Rich Anderson on the show at 12:30 to discuss what's going on in some of these crazy markets like wheat. And I have to tell you a funny story, folks. I mean, it's fun. Sometimes it's really fun getting old. My little grandson is 3.5, and he's as sharp as a tack, and he repeats everything I say. So I've got to be really careful. So last night at dinner, we had something really special, and I said, "Holy moly, guacamole," and he started to repeat it, and he said, "Holy moly, guacamole, Batman." And of course, I didn't realize he was a Batman fan, and I tried to tell him that when I was at Drexel Burnham that I had Batman's sidekick as a customer, Burt Ward. And so I went onto the internet and I clicked on Burt Ward, and I actually could not believe this myself, folks. I thought I was looking into a mirror. The guy looks just like me now. I mean, his picture right now and what I look like, they look very, very similar. Even my grandson said, he said, no. He said, "That's you." And I said, no. I said, "That's not me." But he's a little bit younger than me, but he was a really nice young fellow when I knew him back in the early 70s when they were going strong. But he was married to one of the most beautiful women I've ever seen in my life. Her name was Kathy Kirsch. She played on the Beverly Hills Hillbillies. She was the catering lady there, but she had previously been married to Vince Edwards, the movie star from Dr. Oh dear, I've got a little bit of a doctor, not Dr. Zhivago. What was it? It was Dr. That was one of the early doctor shows that was really popular in the 60s. Anyway, the first chart I posted on here for the commodities today is the DBA, which is the ETF for the commodities. This chart was furnished to me by my partner, and Jim Bartolioni, and he does a lot of work with structure and stuff. He does a lot of Elliott Wave that I don't do, but Jim happens to be an expert at it. He uses that just as a basic guideline. He's primarily looking for Gartleys and butterflies within that structure. And as you can see on this DBA here, that we've come down quite a bit in some of these things, and they've actually held up at a pretty good level on some of these. Others are making retracement levels from much higher level, and that's what we see. No, that wasn't Dr. Welby. No, that was Marcus Welby, MD. That was not that guy happened to be my neighbor. I can't remember his name either, but no, Vince Edwards did Dr. something or other. It was a doctor show. I forget which one it was. It wasn't Dr. No, it wasn't Dr. Kildare. That was oh, gee, you got to catch me on these names, man. I must be getting ready. No, that was Ben Casey. That's what it was. Very good, Mr. Bill. He played Ben Casey is what he did. He was a Vince Edwards was a really his downfall was gambling. I mean, this guy would blow money like you couldn't believe. He made a lot of money in the movie business, but he lost almost all of it. He did lose all of it in gambling. His biggest problem was horses. It would be nothing for him to bet $25,000 on a horse. I've seen him do that more than once or twice, and I was able to have quite a few dinners and lunches with him over the years. He's a really nice guy. He was a former Mr. Universe, and but he had a real problem with the gambling. He really just had to go overboard on everything that he did. And no, you don't want to buy a horse because that's worse than buying a boat, because that's just I owned one horse once for 3 months, and when I started getting those bills every month, I said, nope, that's it. It wasn't worth it. So anyway, let's get back to the markets. We've had some really crazy stuff happen last night with Putin He came on, Mr. Glad I'm Here, Putin, and he came on and said that he was going to play hardball with the rest of the world. That caused the Baltic wheat market to go absolutely crazy, and they had processors, I guess, in the United States, have to scramble for wheat overnight when the market is really thin, and wheat had a 70-cent range last night, 35 up, 35 down, and it's still really, really crazy. Rich is going to talk to us about that, because it's all due to transportation. It has nothing to do with supply and demand from what Rich was telling us. But we'll talk to Rich at the half hour. Now, we talked a little bit about the DBA, which is the overall commodity index thing. So what I'd like to do is to show you, one of the things that we hardly ever look at. We're going to look at two of them here. One is going to be the sugar market. We haven't seen this in a long time because I don't trade sugar hardly ever. In fact, that's the understatement of the year. I haven't traded in probably 10 years or longer. But as you can see on the long-term continuation chart on sugar, on the daily chart, we've had a 3 drive to a bottom pattern form last year. We had the nice 61% rate rally earlier this year, up around 18 cents a pound, and now we're backing off into this gap area where we're going to make a 61% retracement, and this could be a major bottom here in the sugar market. I'll be watching it. I probably won't be trading it, but I'll be watching it through the eyes of my friend Bart, and we'll see, how it ends up, looking over a longer period of time. He happens to be a former F-16 pilot. Let's try that again. F-18 pilot for the Navy. I have the whole squadron. All 4 of them have been are my students, and it's been one of my fun things of doing this through the years is to be able to, see these guys, do very, very well. But boy, do they have the discipline to do this business. Let me tell you, it's really quite amazing. Now, the next one I'd never trade, and that is the cotton market. And I know we all use cotton products, and you'll see that we've had tremendous moves in cotton. We got up to over $2, $2.20 a pound. We've now come down to about 60 cents a pound, so we're down quite a bit, from where we were a couple years ago. But we're still right in that same range as where we've been over the last, year and a half. Well, actually, the last 5 years, we've been in that area of around 60 cents a pound. So cotton could also be making a pretty good bottom. Maybe that's the reason that we have a possibility of this major bull market in stocks that everyone, is talking about, and that's certainly possible. But I did want to bring to your attention something. I'm not sure whether it means very much yet or not, but so far today in the stock market, you will see that the NASDAQ has went up to the exact 61% retracement when it was up about 75 points. We're going to take a look now at the Dow Jones Industrial Average, and you'll see that it also, when it was up 250, was right at the 61% retracement. Now, Basil came on and talked to us about, where it's going to close today, I think is very important. If we close substantially below the high, this is nothing more than another short covering rally that we had once before. The bottom was very, very clear to see, folks, because that was the exact 61% retracement on the New York Stock Exchange Index. It was the 38% retracement on the Dow, and the 50% retracement on the NASDAQ. So all of that's telling us that bottom that we had 2 days ago is where it really occurred, is a very, very important bottom. And the VIX index was also telling us the same thing. Basil also pointed that out. The VIX went up to the exact, 1.618 retracement and didn't go anywhere, from that level. So we have to be really important to watch some of these patterns unfold, because when they do come up, I want to show you the pattern that we had. We talked about this before, and I wanted to get a little bit, I'll show you that 3 drive to a bottom that occurred that we had on December the 16th. That was the Bradley date, the 15th or 16th. We've rallied all the way up to the 61% retracement today, up around that 2030. I think the high was 2041, 2038, I believe, is the exact number. So we have had one heck of a good rally, and I think we're going to have a lot of resistance at that level, and that's just because, it's got a chance to, it's got to close really, really strong today, much above 2040. And then I would say, yes, we could continue on. But, folks, this doesn't really change anything. We've had, just a tremendous short covering rally. And we've had more new lows and new highs all the way down on this thing, and it's been telling us that. Now we have to see, what it's going to do, if this structure of the market is going to change at all. Occurred at that point, and we're supposed to get some kind of a rally, but this rally is a little bit stronger than even the bearish person that I am. And believe me, there's no way they were going to have me short that thing yesterday. I bought a little bit, but I didn't stay in it long enough. But there was no way I'm going to be short after that 3 drive to a bottom pattern form, because that is one of the more powerful patterns that we can see. One other thing that's happened today, from a technical point of view, for me, is that we left this monster gap in the cash S&P. I think it's about 4 points in the index that's trading at 205. So that's a huge gap in that, and I think that will certainly be filled, whether it'll be filled right away or not. The key is the close today. We're up about 272 points in the Dow right now. We're up about 74 in the NASDAQ. We're up about 30 in the S&P. If we close down about half of that, say under 200 in the Dow, and under, say, 15 or 20 in the S&P, under 40 or 50 in the NASDAQ, that would be a very poor showing, in my opinion, and, we'll see if that's going to be the case. We've had some strength across Europe. Even the DAX has increased quite a bit. It has gone above the 61% retracement of the down move. And these are great markets, folks, for volatility. You just can't ask for anything better than this. This is what the mother god and country is for pattern recognition swing traders. I wanted to mention something that Basil was talking about on his show, that someone had a question, I believe, or was posted into the Tiger Den, about some of these patterns that we look at. And if you're really interested in the historical structure of some of these patterns, there's a book by John Michel. That's M-I-C-H-E-L, John Michel. It's called The Dimensions of Paradise. You can get it at Amazon. There's lots of used copies of it available, but it goes through the structure and formations of these patterns as they came to us through all the years, going back to the Sumerians, which is about 8,000 years ago. I know Sumerians were 5,000 years ago, so Babylonians were about 8,000 years ago, and even the Babylonians, did all of these things. So it's very interesting how we do this. We got the Dow up 280 points, the S&P up 31, and gold is unchanged.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, we're going to take a trip down under to Australia. I was just there on December 12th, 13th, and 14th giving speeches to three major cities there across the country, and it was a really fun place to go. It's like California was 50 years ago is what it reminded me of. It's really quite cool. But I wanted to show you the chart. This is the EWA, which is basically the Australian stock market. When I was there just a few weeks ago, wow, it's been a month ago already. Wow, more than a month. Shut the front door and raise the rent. I didn't realize it'd been that long. We were up at that little consolidation area, that little ABCD, and just started to turn down. And I actually drew this pattern in and showed the folks that I thought we were going to go down and make this big ABCD in the pattern that matched up what was happening with the Australian dollar. And there was another gentleman on the same docket that I was on, and he respectively said that I was full of baloney, which he usually is right most of the time, but this time I happened to be right. And it did go down and make this ABCD pattern. And what I wanted to show you is the fact that this Australian dollar is very highly linked to, some commodities, especially mining stuff. Bunker Hill Properties is one of the bigger ones there, along with Rio Tinto. Those stocks trade very, very heavily, and they trade beautiful harmonic patterns that we look at. So what I'd like to do next is to show you, what the Australian dollar looks like on a long-term basis, because that was part of what I was looking at when I was watching this, is the fact that we were going down to make that 1.618 expansion in the Canadian dollar. And if you'll notice on the right-hand side over there, we have point D. You'll notice that if you can see it, there's a price of 81.23, and that's been the low of the Australian dollar the last 2 days in a row. We've rallied about 90 pips off that bottom so far. It's held, quite well 2 days in a row. And I believe this is a spot to go long the Canadian dollar, or go long, let's try it again, to go long the Australian dollar. And you don't have to risk very much from here. And that would be, in effect, you'd be going long the Australian stock market at that time. And if our market is going to be really strong to the upside and we blow out these highs, other markets in the world are most probably going to come along and follow along right behind it. That would be my guess. But this is a beautiful pattern. It has everything you could ask for. You're at a very, very low risk threshold, because if you get below 81, you're most probably wrong. And the reason for that is that you've hit that exact 1.618 number 2 days in a row. And these currencies trade many, many thousands of times more than the stock market, folks. So this is real serious money that's in these markets at the time. It's not funny money like in the S&P and the NASDAQ and some of these other indices and stuff that we trade. This is real cash money in these foreign currency markets. So it's very, very important to what we're looking at. We will have Rich on at the break, but I wanted to bring this to your attention because you can trade this EWA without very much risk at this point. And so you might want to look at that because the risk here is very, very small. It's a pattern that has completed nearly perfectly. If you wanted to be safe, you could wait a day or two, and if it does go higher, you pay up for it, but that just tells you that you're in the right direction, and you can even keep your risk. But as long as it doesn't go below the 81 level in the Australian dollar, I think you've got a pretty good chance for some really good gains in this particular one. And this is, it's also, a part of the crude oil market, and we've had some tremendous, moves in the crude oil market. I wanted to show you because we are at the proverbial moment of truth in the oil as we're talking today. Here, if I can just find it, I know I put it here somewhere. Please, here we go. And I wanted to show you where we are with oil today because we're having our first major Gartley pattern in oil. I don't know where it's trading right now, but when it got down to that 55 20 level, that was the area where it should be holding there because you're completing a big ABCD. You're making a 61% retracement from the low we made back on December 16th, which was the bottom of the stock market day. So all of that tells us that we're very, very close. But we need that oil to stay above that 55 50 level or 55.30 level. We're trading around 55.94 right now, so it started to work in the right direction. So that's another one that's beginning to look pretty interesting. Okay, we got the Dow up 266 and the oil is unchanged. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. How it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I think we have our friend Rich Anderson on the air. Rich, are you there?
You bet. How you doing, Larry?
Rich, I wanted to thank you, buddy. I got 2 bottles of Dom Perignon, a bottle of Louis Roederer Cristal, 2 bottles of wine, assorted boxes of candy, and a dozen roses for your call that you gave us on cattle, up around $71, $171 a pound, and they've broken about 20 cents from that level. And the folks here at TFNN were very, very happy to have you on the air, buddy. So thanks a lot. Now, the next question they had is, what do you have next for us?
Well, you know, this washout's been brutal. The exchange. Remember back in the old days how you get locked into a limit and they go limit, and then they went to variable rates. Well, then the Merck had expanded the rates to wide ranges, and they didn't do variables, but they still got people locked in. They finally last night decided to go to variable limits again, and that released the pressure and allowed some of these guys out. I think that, look, we've got a $3.20 range in Feb cattle today. We've got a $7.30 range in March feeders today. I mean, these are just unbelievable things. I really think we'll probably find some value down at these lower levels here today. we had some large traders that were stuck. One might have been a hedge fund that was liquidating positions, and when they couldn't liquidate, and everybody knows it, and then every time you drop through a strike price, then all those people that are short puts, they now have to sell, and it's a snowballing effect. And that's what's happened in the cattle, and then yesterday it also affected the hogs early in the morning, and you could have bought hogs limit down. Well, that was a no-brainer. It was just because they have value. But on the flip side, we've got the wheat in the last 5 days has moved over $1, and it wasn't that long ago. It was $4.80. Yeah. And Russia made their announcements today how they're only going to export 30 million metric tons, and they've already sent out 19 million. They're going to stop railroad loading. The key there is that to the Russian housewife, 3-4 weeks ago, a loaf of bread cost 30 to 35 rubles, and this week it's over 80. Well, you can just imagine they're screaming like crazy about that.
Sure.
And you don't stay president very long if all the housewives are mad at you. That's at least
Jimmy
that's
Carter
my opinion.
Certainly
So that's
found
kind
that
of interesting.
out, didn't he?
The 55. 97 today on these cattle. I think that might be a major Fibonacci number if you do your work from the weekly charts. And there's some others.
I'll have to take a look at. I've been focusing on the grain markets because we had a 75-cent swing in wheat last night that we just almost never see. Even during weather markets, we hardly ever see a 75-cent swing in wheat, and I think it's gone well over $1 and change in just a few days, hasn't it?
It's gone over $1 in 5 days, yeah. But it's the ag minister spoke last night, and that's what drove it up to 677, which old lows become resistance. And if you notice the old lows, for those that can't calculate Fibonacci retracements, the old lows become resistance, and they kind of stopped it up into that area.
Yeah, that was a 786 on the weekly chart from that old high of last year.
Right, and then it was an old low up in that area too. So we probably priced that in. What happens is you and I both thought we bought wheat out of the Black Sea from Russia, and all of a sudden they're only shipping it to Egypt and India, and so we got to go someplace else, and everybody knows about it, and so they punish you. But in the cash markets, as example, last night the basis weakened on the corn, even though the corn is strong here. I think it's fully priced right now. I suspect the beans are fully priced. The value is probably, watch Dr. Copper, because copper is the best indicator of how the economy is really going, I think. And so I'm going to keep my eye on copper as an early indicator that the economy is better or not. By the years ending in 5 have done rather well in the stock market. So if we get a 10% correction at any point next year, I'll probably be on the long side of that market, even though I don't trade it very often, but I will in that particular year because I think that'll be real opportunity. I told you last week how they were discounting the heavyweight cattle and feeders, and you saw it react in the futures market. When they start to widen the basis on the corn, the farmers want to sell it at these high prices. There's so much for sale. The world's swimming in wheat, but if Russia's not selling, that still means a bunch of other people have to go buy it from someplace else. I think the grains are fully valued at these levels for the moment. Looks like some breakouts on the chart, but sometimes breakouts fail on some of these patterns, and I expect that to be the case here.
Mm-hmm. Okay, we'll keep an eye on that. You certainly had us alerted to the cattle market. You've had a really good handle on that. And we'll be watching for the rally, to see what kind of a rally we get over the next few days. But to see those kinds of swings in the futures that we're having is really just like the old days. I can remember they used to go limit down 5 or 6 days in a row, then limit up 5 or 6 days in a row. And now with these expanded things that they have, it's really hard to tell sometimes
where the range in gold today. Gold. Look at the range in crude. I meant.
Crude we had $5,000 up yesterday.
Risk on and risk off. When the money's flowing in, everything's going to go up. When the money's flowing out, everything's going down.
Yeah.
Yesterday was risk on day, and so the stock market was up. Grains are up. Some of the metals are up. Today they're taking some risk off.
Yeah.
Russia, by the way, their reserves, they had quite a stockpile of reserves, and those reserves are dwindling very fast because with $100 a barrel oil is your what you need for your programs, they're going to run a 1 trillion ruble deficit, and and then you got inflation going at 7, 8, 9%. There's a lot of issues going on there, and that affects all that part of the world, and ripples into the rest of Europe.
Yeah, that's for sure. Rich, I know you have some good contacts in, the financial and stuff. What is your feeling on what the Fed did yesterday as far as doing nothing? Is there any scuttlebutt that you can share with us that you've heard about that meeting?
Well, I think the focus was that they were planning on making a slight change in the statement, and the changes in the statement usually are only one or two words. So it's really reading between the lines. But by doing nothing, they're saying we're kind of concerned about Russia and how this whole thing could, get worse as far economically speaking. So we don't dare do anything that will rock the boat even a bit.
Mm-hmm.
They statement they were going to take considerable time out of the statement as far as keeping interest rates low, and they did. There's just too much uncertainty because Russia's going down fast, and it owes lots of money to lots of these other different countries, and right now it's looking at using its sovereign bonds to finance its debt and help some of its major corporations. But then they're not going to have any reserves, and then their debt's going to get downgraded, and then that's a vicious snowball too.
Mm-hmm.
You would have thought yesterday Putin would have been more conciliatory in his statements.
Well, from an ex-KGB, I don't think anybody was expecting a whole lot of conciliation on his part.
No, but the bottom line is power for him is his bank account, and his bank account's gotten a whole lot smaller.
Yeah, that's for sure.
The reserves of Russia have gotten a whole lot smaller.
Rich, we've known each other
for 14 years, and they're dissipating over months.
Yeah. Rich, remember the days when Mexico used to devalue?
Right.
Yeah.
And trading the peso, though, that was fun.
Oh, yeah, they would give you 18, 20% interest rates, and then 2 weeks later they would devalue.
You can take advantage of those increases in vol.
Hmm. Do you have any feeling about these restrictions that have been lifted on Cuba? Are we going to be able to trade Cuban cigars soon, you think?
Well,
We're
I'm
trading
sure,
everything else.
I think it was mostly a political strategy. But the restrictions include some reparation for the property that was seized back in the 60s, but it'll be at pennies on the dollar, if that. And you'll start to see more South American money that's been going into Miami. 2-3 years from now, will be going into Cuba. It's probably long overdue, and it'll be an economic boom for them. It'll maybe add a little bit of more imports of sugar. It'll help us a little bit, but it'll mostly help them a bunch, and it'll help sway some of the Cuban voters.
Well, that's someone was on TV last night. I happened to be trying to search for a score of Arizona basketball, and I ran into this guy. He's on one of the talk shows. I forget it was, and he was saying that Cuba's going to be our 51st state. And I thought Puerto Rico would be 50th.
Puerto Rico, Mexico.
Yeah, the Dominican Republic. Yeah, that's
Dominican
for sure.
Republic. Yeah, there's. We could get several more states if we'd want them.
Yeah,
and until they become states, they'll just come here.
They'll just need them for voting. That's for sure.
Right.
Well, I think if they, I've actually been to Cuba 8 years ago, and you can get in there without even having a passport. And I went down there just for a weekend with another friend of mine. I was looking at business opportunity, and it was really a really lovely country. What's so amazing about it is they're all driving around in these cars from the 50s and 60s. They don't have new cars.
Right. So
it's all
that'll
50s
be a
and
big
60s
thing for our American car company.
Yeah, they can repair them, basically with duct tape and baling wire. And that's why they're so popular. And they don't take, the super, high-leaded gasoline and stuff like that. Of course, they don't have any smog control, but the cars from the 50s or 60s are really the best ones. Speaking of that, Rich, the biggest bull market that we've had over the last 3 years has been antique cars.
Oh, really?
Oh, my gosh. They're up 10, 20 times what they were a few years ago.
The worst investment this year, Larry, has been Bitcoin. And of digital currencies, Bitcoin is of the digital currencies as Charmin is to toilet paper. It's the best. It's the best of. There are like 300 of these different digital currencies.
I didn't.
It's the
I'm
best
not
of these
aware of
digital
that.
currencies.
I never thought they would allow that. They're not going to allow anything like that to happen because then they bypass, the Federal Reserve, and that's how they control everything. And so they'll either shut it down or to let it die itself, would be my guess. People ask me about it all the time, and I bought a really good book about Bitcoin, and I've read half of it. I still don't understand it. I'm halfway through the book, but needless to say, some people are still using it. So I've never seen a Bitcoin. I don't know what it looks like or anything. I've seen pictures of it, but I've never seen an actual one. But maybe they're only on the computer. I don't know.
It fluctuates too. It's like Apple stopped selling computers in Russia. They have a website, and they were selling computers in Russia. They stopped selling because they couldn't keep up with the currency move. By the way, the dollar making new highs is making. We're no longer competitive in the world market to sell wheat. Not really competitive to sell corn. Once South America comes on board with their crop, won't be competitive to sell beans. This short-term deal in wheat is more a transportation issue because we've taken the Black Sea exports out of the market. It's kind of like we had the transportation issue with the soybean meal back in November and early December, and drove the meal a little crazy there for a while.
Wow. That's really good. Well, listen, Rich, we'll have you on in another week or so after the holidays, of course, because I know you spend a lot of time doing your philanthropic work with the family over the holidays. I want to wish you and Lisa and the kids, the best of holidays, and thank you for being our guest here all the time. We really appreciate it, and I especially do because all the nice gifts that I get, I don't forward them on to you, Rich. I try to use them ahead of time.
I know, because I don't drink or smoke, so, I never have and never will. But next time, hopefully, I'll be down in Naples when we talk.
Yeah, I don't smoke, but occasionally I've been known to take a glass of wine, but not every day, but once in a while. Yeah. Hey, listen, thanks a lot, buddy. We really appreciate it, my friend.
Take care.
You bet. That was Rich Anderson of Anderson Capital Management, and I've known Rich since he was 19 years old, so it's been quite a long time since I've known the old dude, so that's pretty good. I wanted to take a second here to bring up a chart that someone was kind enough, one of our dinners, Marshall, sent me a chart of the Elliott wave theorist, and it has a lot of Elliott wave, but it's basically on the gold market. This was based in November, and basically what he was looking for was this wave 5 that has come down, and it showed the commitment of traders where there's the largest number of shorts that we had. Of course, we've had a $100 rally from that bottom, and we were record low on sentiment, which was what we expect to see, but we've really still got a chance in gold. Now, recently, over the last several days here, and Rich was mentioning a little bit about gold and then also crude oil. Yeah, we got to take a little break here, folks. We got the stock market still rallying strong, and we got gold down a couple of bucks on the day.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. This offer is valid for current or new subscribers, but is only good through this week and ends this Sunday, December 21st. Lock in the low rate of only $10 a week for the Gold Report by placing your order at the front page of TFNN.com today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and we've got a few minutes here. I wanted to go over a couple of technical things that I think are relatively important. I posted into Tiger TV the New York Stock Exchange Index showing the 61% retracement that we made back on the 16th, just 2 days ago. We're in a massive 2-day rally like we haven't seen in a long time. You can see the gaps that we have on the chart. Here in the NYSE, of course, you see a big gap, but you see a monster gap in the cash S&P. I think about 350 of the S&P stocks all gapped up today, causing these huge gaps. And, we know that 99% of the gaps are always filled. The $64 question is what we're going to look like when we come in. We have Friday, of course, to get through. And it looks like we're going to be in a up week, I believe, and that'll give a positive bias for Friday, and then we'll see what happens at the beginning of the week. We're still having, up until this rally here, we've had much lower new highs than new lows. New lows are expanding over new highs, which has been bad. That was one of the things. We've had this divergence in the New York Stock Exchange Index where it's been unable to make new highs in July, September, and again in December. And maybe it'll be the fourth time that it does it this time. We'll have to wait and see. It still looks bearish to me on a long term. This rally is certainly anticipated coming off of that 618 and the 3-drive pattern. I'd like to end the show. We've had a request to take a look at the Bradley model, and as you can see, the model back on October the 15th called for a pretty significant bottom, and in fact it did. We had a bottom due around the 16th, and we got that one. and now we're coming in, to a really strong rally. We're already, we've just exceeded the 61% retracement of the high on that we made back on December the 3rd. We just went above that by about 20 points right now, with the Dow up over 310 points. So that it appears we're going to go a little bit higher. This rally, based on the Bradley model, could extend all the way to the end of the year. That wouldn't be unusual. And of course, we have the January effect that kicks in sometimes in mid-November. That goes all the way through mid-January that could happen, and that just means that the small caps are going to increase more rapidly than they do on the large caps, and that's been the case so far. The Russell has actually held up relatively well. We've showed this pattern several times over the past few months, and we did just make a beautiful retracement on the Russell 2 days ago, also making a 3 drive to a bottom pattern that gave us an indication that there was probably going to be a pretty good rally coming in here at this time. So whether that's going to be going all the way through to the end of the year is certainly possible, because we have a up year for sure. We have to go quite a ways to get an up month, because we started the month right near the high, so we have to get another 300 points higher. No, not that. Yeah, 300 points higher in the Dow. Another day like today, we could be a new high ground. And given the way the markets are jumping around these days, if the market can go up 300 points one day and 300 points the next, it can very easily go up 600 points in 2 days. So they go up, they go down. That's the bottom line. So we'll wait and see how this rally finishes out here this week, and then we'll look to see when it first starts to stall just a little bit. But right now, the Express is moving. There's no way to stand in front of it. I mean, with these gaps and these huge amount of buying that happens, especially after markets been oversold for 10 days, everybody thinks they've missed the boat and they've got to get in and, buy. And they might be right. You don't know. We'll have to wait and see. Usually that's not the case. So live every day in an attitude of gratitude, and may God bless, and do something nice for someone who has a lot less than you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.